preparing to live stream. Now it's taking a lot longer.
Oh, I think we're on.
Oh, we're on. There we are. Excellent. Hey, everybody. My name is Joe Bladek. Nice to see you all. I am joined here today with Sam Thompson, and I'm a mortgage broker. Sam is a mortgage agent, and we are going to be talking today on our first live video for 2021. So welcome everybody to 2021. We are excited to join in here with you and give you all an update on what's been going on. So to give you a little bit of about an introduction to us. So Sam Thompson here. Sam's a mortgage agent. He's been working with a lot of first-time home buyers in 2020, and we're going to be chatting with Sam today about some of the top questions he's gotten from the first-time buyers, and he's going to share a lot of knowledge with just what's been happening in the market that way, and just what's been happening out there with what's on people's minds when they're buying their first home. So maybe this will be a good resource for you to watch and maybe pick up some questions either for yourself if you're a first-time home buyer, or maybe a friend or a family, they're a first-time home buyer, and you can relay some of this information to them. So Sam Thompson, he's been doing an excellent job, and he'll be doing that. And myself, I'm Joe Bladek, and I'm a mortgage broker. And Sam and I both here work in the Barrie and Orillia area. And Terry Lynn as well. She was not able to join us today, but she is working today, and she'll be able to answer any questions as well if you call in today. But yeah, before we get into all that stuff today, welcome back, Sam. Welcome back, everybody. I know that we're not working together, Sam, beside each other this year, but you know, for most of 2020, we've been Zooming back and forth quite often, haven't we?
That's right. It's been definitely a unique season for everybody getting into how to do things virtually and online. But it really hasn't slowed the process too much. I think, you know, our line of work is very digital based anyways, so we've gotten used to doing our monthly staff lunches over Zoom with Skip the Dishes. So there's been a lot of changes, but yeah, it's been fun to be a part of, you know, where the industry has gone and how it's shifted.
Awesome. That's great. And so how was your New Year's and all your holidays? How's all that?
Yeah, it was good. It was definitely more downplayed than previous years have been. But yeah, I think what most people did was probably the same as me. I just kind of stayed local, stayed at home, watched the ball drop, which again looked very sad compared to previous years when there's so few people in New York. We watched the live stream, but
yeah, there was so little people there, eh? Like everyone was just they had those booths there where they were doing the interviews, but there was no crowd and a lot less excitement. I remember tuning in the YouTube and every time I wanted to watch Times Square, all that was there was pretty much just the ball, and that was the most exciting part, almost, right?
Yeah, for sure.
And just seeing the ball. But yeah, it was a different New Year's, and same as you, stayed in. We had a dance party with the kids at home, and we brought out like a party light, so that was pretty fun, and had like a fake countdown online, so that was great. So then they can go to bed at an appropriate time, of course. Awesome. So yeah, thanks for joining us, everybody, and thanks, Sam, for coming on today. We're really looking forward to being back in the seat this year, 2021. It's going to be a great year. Sam, I think we're starting off on a good foot here. I know that coming out of 2020, it's been a little bit of a difficult year for everybody on a bunch of different levels, but going into 2020, I think we're gonna see it come out of that, and I'm really I have a lot of hope in that. But what about you, Sam? You looking forward to being back this year, helping more first-time buyers out?
Yeah, absolutely. I think this year, I mean, New Year's for me is always a really great time where it feels like you're starting fresh. You
Yeah.
can push for things that you maybe left behind in the last year. And especially with COVID, making 2020 a very different year, it put, some people's plans sort of on the back burner. So it's nice that starting this new year, um, we're more, um, we're more spontaneous, I'd say, after going through 2020 with lockdowns and reopenings and lockdowns. I think this year will be good because I think we know a little bit more of what to expect. And again, it's always exciting to get back in and have a better footing of, how to help people get their mortgages. We know a little bit more of, what happens with employment. We've seen it before. It's not all new for the first time. So yeah, it'll
Exactly.
be exciting. Mhm.
Yeah, I think it's going to be really exciting, and you're absolutely right. It's a little bit more of a different uh, experience this time around because, as you said, a lot of this stuff that's happened in 2020, we should know what to expect in the mortgage area, mortgage playing field in 2021. So, what I'm going to just say is maybe we should pop in and start off our video here. I have my chat app open if anyone wants to ask any questions. I don't know if you have that open there. I was able to open it on the left. When you go down to the bottom and you just open the chat app. So we're ready for that. So I'm really looking forward to getting into this. So did you want to talk about what are we talking about today, Sam?
Yeah, of course. So what we're going to do starting off 2021 is we're going to take a look at some of the market updates that we've seen since New Year's. We're also going to have a quick look at, sort of where the market's at, look at the rates. And we're going to actually cover off a lot of the questions that we had in 2020 because I'm sure, Joe, you know as well, there was a lot of questions that weren't typical to a regular year in mortgages due to COVID. So we're going to look back at, some of the most common ones that we had, and especially since we're currently in a lockdown, a lot of the information is still quite relevant, and a lot of the questions have probably stayed the same since last year. So we're going to cover off all of those top questions and give you guys some updates. And if you're watching this video, we do also want to let you guys know what we're going to do as sort of a prize or incentive for watching our video. We're actually going to be giving away a $25 gift card to Skip the Dishes so you can keep your contactless delivery up to date. And to be, entered into that draw, you just have to like this video, either comment on it or share it. And then you can also do this throughout the week. We're going to be doing the draw for who won next Wednesday. So even if you're late and you weren't able to watch this video live with us today, you can still do so until next Wednesday.
Excellent. Awesome. I'm looking forward to that. It should be fun. And yeah, $25 to skip the dishes. That is fantastic. Just I've used that quite often now over the last few months, I gotta admit. And it's just a fantastic way to get your food. So yeah, I guess we should get into the to some of the industry updates. Thanks very much, Sam. So getting into some of that, I love to talk about what everyone's asking me about. So with the industry, a lot of people are asking me what's happening with the housing market because, should I sell? Should I buy? I'm really on the fence. Sam, we've seen that too, right? A lot of buyers that we deal with, they sometimes they want to buy, but then they don't know if it's the right time. Is it the right time now? Is it the right time in 6 months? Is it the right time in 12 months? And what I've seen through COVID and what you've seen through COVID is that the demand for real estate has actually taken a huge turn towards the uptick. And there's huge demand over the holidays and the Christmas break. I was seeing real estate agents post things like, we don't have any more houses to sell, or there's only 8 bungalows left. We need to see, we need more inventory. And when there's that little inventory, it's going to send the prices up, up, and up. So I don't know about you, but with that sort of inventory and the current demand that is there, there's enough to keep the housing market going for a long time. And as for demand in terms of mortgages, because the rates have also been trending downwards with COVID since the start of March, that's also helped the demand for real estate and drive it. Where we have seen drops in demand are condos, and that's in Toronto. And I mean, that's in Ontario. I'm not too familiar with BC, but in Toronto, I have seen a little bit of a drop there because people are just interested in getting out of the city. And, you know, Sam, you and I talk about this sometimes, and that's those clients that we have that are either selling from Toronto and moving up here to Barrie or Orillia or Midland, or they are just, you know, renting in Toronto and they wanted to buy a condo. And we've had a few people like this, but instead they realize, hey, my job now, I can live anywhere I want. I can move to Midland or Orillia or Barrie, and I already have enough down payment. I already can buy a house because the price range is a lot lower. And I've seen articles out there now saying things like, you know, there's a big movement now from urban, like Toronto, to smaller density, lesser density communities outside of Toronto. And that's going to be great for areas like Barrie, Orillia, Midland. It's going to be great for real estate demand, and also for all the other pockets like Durham region. You have Pickering, you have Whitby, Oshawa, Scarborough, like all east of Toronto, and then you have all west of Toronto, like Hamilton and Burlington and Niagara. So that's going to be just awesome for those pockets as people get out of Toronto and move out this way. So I think for the industry, we have very strong demand if you want to sell, and the drawback is you have to buy something in this market, but having a really good real estate agent helps a lot. And Sam and I can connect anyone here looking for a real estate agent with someone that is suitable for them, someone that matches your personality, and someone that can really help you, and also local to your market. And they can help you get the top amount for your home when you go to sell it, and help you get the best deal when you buy the next one. But as far as mortgages go, we can get you the best mortgage rate, and with rates trending down, it's keeping demand high. So I don't know if there's any questions online yet, but I just wanted to remind people that they can ask a question online. And if there's not, what I'll do is I'll pass it back to you here, Sam. Maybe we can talk about some of the top questions for 2020, because that to me sounds like the most interesting part of this whole talk. And as much as the industry and market update is amazing, rates are low, the demand is high, and I'm not really sure how much more to speak to that, because not many people are selling their homes right now. It's hard to with COVID, and the people that are, I mean, they're getting, I mean, like I hear the term all the time, top dollar for their homes.
Yeah.
And I've even seen some people sell and go to renting for the time period. So there's a bunch of people in different boats. But let's go to the top questions for 2020. So Sam, what's the first question you got there? I know you have a bunch that you've prepared. So what's the first question? We'll just talk about that one there.
Yeah, of course. So the first one that we've actually seen a lot of in this COVID situation the last year is actually a lot about spousal separation and where that leaves you with your mortgage. It's unfortunate to see that this question is as common as it is, but it's a valid question of, what happens to your mortgage during a spousal separation? What are the steps that are involved in that? So yeah, just in terms of what sort of things you would need for a spousal separation, you definitely will need a separation agreement, and there's a a need for information on is there child support, any sort of that type of thing to, in addition of something that you wouldn't normally need to have. That is going to be something that we'll need to have. So if you are going through the process, making sure that that is a top priority to have that agreement and be able to get that to us so that we can submit your application.
Mhm.
I'm sure, Joe, that you've worked with a few of these over this last year.
Yes, we have, and I have, and it's really unfortunate to see this, but it is a result, I think, a lot due to the trend of COVID and people staying home and all that. And unfortunately, it is happening, and we're here to help. And if you are in that situation, we can help you discuss your options with you in this moment. And it's can be very stressful, so there is never any judgment. With regards to uh, the spousal separation, though, yeah, there's a very big need for that separation agreement, Sam, and that will help determine your affordability at the end of the day, because that spousal separation agreement is going to tell us how much support you are obligated to pay for child support or spousal support, also how much you will be receiving, and also any buyouts, because what's important with a spousal separation is how we're distributing the current equity in the home. So we're looking for a buyout figure. If you don't have a spousal separation agreement yet and are in the process of getting that, then Sam and I can still talk to you about some of the intricacies and what to expect and give you a game plan as to how you would proceed. And that way, at least you get an idea of what steps you should expect, what documents in total you would need, and also roughly how much you can afford. And Sam, that's a big thing. I have sometimes one spouse come to me and ask, we're thinking about this, or I'm thinking about this. How can we look at this? Can I afford to separate even? And that sometimes is a really hard conversation to have, but sometimes you need to know that. And again, with a spousal separation, it's really empowering to know that you can separate and still afford your mortgage and be qualified for that, and to know that there are options out there even if the big five banks aren't able to do the mortgage for you.
Right.
Right. But in terms of other documents, Sam, you would need for that, in addition to the spousal separation agreement, things like income documents, so employment letters, pay stubs, and quite often we have to break that mortgage. So Sam, we would need to know the mortgage penalty as well at that point, just so we can factor all that into the calculations.
Mhm.
Hmm. But yeah, we've been working with a lot of those folks, and Sam, I know you're dealing with them as well, and it is a hard type of mortgage, but we can help with the title change and all that and get that ball rolling
Mhm.
for them. Yeah.
Yeah.
Yeah. So there's another so from that aspect, I think we'll probably see more of that in 2021, just as the dust settles from 2020. And
Yeah.
you know, if anyone does have any questions, reach out to Sam or myself and we can guide you through that. But
Mhm.
it is huge, isn't it now, Sam? We're going to be seeing a lot of that more.
It is, and we're seeing a lot of them play out differently. Whether the solution is also just selling the home, or as you were saying, adding someone to title. If you're unable to support the full mortgage by yourself, that's something that we can look into about adding an additional income and an additional person to the title of the mortgage to help you keep your home. Um, in the event of a separation. So there's lots of ways to go around the scenario.
Yeah, that's absolutely right. Thanks for bringing that up. I completely forgot about that part. So that's great. So another top question of 2020 that we've had, I guess, is can I get pre-approved if I'm laid off due to COVID? And that was a question that myself had quite often during 2020. And Sam, you had probably more than me during 2020 because dealing with first-time home buyers, a lot of those folks got laid off because they're just starting out in their jobs, or they may be in the service industry, and that got really highly affected. But in terms of yeah, like I'm sure you saw a lot of that.
Yeah, it was definitely a tough season for employment, and it left a lot of people wondering, where that leaves me, because there was also some uncertainty until a lot of companies or businesses adapted to doing work online. The initial response was just layoffs. So we found, again, particularly dealing with a lot of first-time or new buyers, they were left kind of wondering, what can we do? And yeah, especially again, now that this month of January, we're back into a season of shutdown where a lot of people could be laid off, especially like you're saying, in the service industry.
Yeah.
So it does leave, sort of a question of how that's calculated. And unfortunately, when you are currently laid off, we can't really do much in terms of actually submitting your pre-approval. What we can do to keep it proactive, again, because we're given a tentative date of when lockdown should end, is you can actually reach out to us. We can set up everything. We can get a lot of the necessary documents in, so that once you are, reinstated and back at, your regular earnings, or even a different style of employment, but you are back, as a current employee and on payroll, we can work to get that submitted for pre-approval once that happens.
Excellent. That's a great update there. And with that, when you are pre-approved, you know exactly where you're standing and how much mortgage you can afford. And when we do that for you, you know exactly how confident you should be when you're going into that offer. Am I going to afford this place? Am I actually going to get the mortgage? Well, of course you are, because at the end of the day, you've been pre-approved, and the only thing at that point that is stopping you from getting the mortgage is perhaps the property itself. Maybe you're buying a place that is a tear down, and the bank might have an issue about that. But yeah, really unfortunate. I agree, Sam, to see these folks that have great credit. They have, perfect repayment history on their credit cards and mortgages, but they just can't get that mortgage right now because they are laid off. And that's the case. If you own your house right now and you're laid off, you are not going to be able to remortgage. And but you can still keep your mortgage, which is great, because once you have it, you have it.
Yeah. And in terms of if your employment has shifted, Joe, to say, temporary or contract, how have we seen that affecting people's approval? Say if they've been shifted from a full-time position to part-time, or, different changes like that?
It's a great question there. So with that, I've seen a lot of people actually have their employment changed. And when I say changed, I mean their arrangements. So say if someone is working for a company as a full-time employee on a salary basis, maybe they got laid off due to COVID in March or April of 2020, but they came back not as a full-time salary employee, but as a like a contract employee, or as a temporary employee, or as a part-time employee, or as a casual employee. So there's a lot of different statuses that you can move into once you're brought back. And what I found some people didn't know, especially first-time buyers, is that that affects how much I can afford now, because as you know, Sam, if you have a salary letter and you've been at the company past your probation, you can almost get a mortgage tomorrow.
Yeah.
But like with contract, you need to wait 2 years sometimes with certain lenders to be able to even get a mortgage. So we actually, yeah, we had an instance where a client had that situation happen. They were a full-time salary employee, and when they got back to work, we set up a follow-up appointment to reactivate the pre-approval, and unfortunately they were brought back as a temporary contract employee, and it was difficult to get the approval, and at the end of the day, he has to wait. So unfortunately, that's the case there.
Mhm.
But yeah, we can look at all the different scenarios, and sometimes we can make it work if there's other income. Maybe there's something like a temporary cosigner, which we can chat about. If that makes sense. Temporary cosigners is
Mhm.
something that Sam and myself had a few questions about. And Sam, can you talk a little bit about what temporary cosigners are?
Yeah, absolutely. It's definitely on the uptrend, I would say, with a lot of people that I've been chatting with. As you were saying, the market, the prices are top dollar, as the quote was from before. So people are actually finding it quite a bit harder during the COVID season to, get approved on a single income, or even we are seeing, new couples that are just starting out that maybe aren't at an income threshold to qualify for a fully detached home. Um, Temporary cosigner is a very viable option for them, and it's something
Mhm.
that we've been pointing a lot of people to, just to help them get into the market, to start building equity, so that they can become self-sufficient in the housing market. So a lot of people, they take a big back step when they hear the term co-signer. They don't want to get their parents involved. They want to have, their sense of independence, and they don't want to lock someone in.
Yeah.
But the beauty of a temporary co-signer is it doesn't have to be, permanent. We can set it up that it is temporary for, 1 to 3 years with that additional, income on title. And what that does is actually it can quite significantly increase what you would qualify for. We've even seen that if the person being added to title as a co-signer, even if they're receiving, a pension benefit of 30,000 a year, that can again really drastically improve and increase what you would qualify for in today's housing market.
Yeah, that's a good point. And I feel like a lot of folks don't really realize that, maybe they have that aunt that is on a pension that can co-sign for them. And, they think that, it's not going to make that much of a difference. But at the end of the day, it's going to take them from them actually affording a house today versus affording a house in 2 or 3 years. So yeah, temporary co-signer is a great idea, and it allows also for folks to get into the house and then remove the co-signer down the road. Like in 2 3 years, you'll have more equity, you'll have lower mortgage, and ideally higher income, and ideally lower credit. So all those four factors combined, we can apply for the removal of the co-signer once we get to that point. And usually it's just a legal fee, and that legal fee ends up being anywhere between $300 to $500, and that depends on the lawyer, which is pretty fantastic. In some situations, it is more. Maybe you also want to lower your rate at that time, or a different mortgage company at that time, but there's a bunch of different options. So that is
Mhm.
something that is totally worthwhile to look into, because you know there are some people, Sam, that did get a temporary co-signer and did get into the market despite them not wanting to do the co-signer, and they've done really well.
Mhm.
You know,
Yeah, it's definitely a smart decision
yeah,
when it gets you into the market. A lot of people, I know that we've seen it, here and there in our industry, where they decide, oh, I'll wait, 3 4 years to save up enough for a down payment, but then once they reach those 3 years, they find that their income amount is still shortfalling them from what they actually need to
yeah.
qualify for the new house prices in the current year. So this is actually a way to help combat waiting that time to realize that you're still out of reach. It can really help you just get into the market so that you can sustain yourself in the housing market.
You bet. You bet. So as we get into 2020, sorry, 2021, keep thinking it's 2020. I think if anyone who is temporarily laid off could take advantage of this temporary cosigner route to get into their home today. And then once they're back at work, we could remove that cosigner and they still have their home and they still have that mortgage rate they locked in at. And it may have cost them an additional $500 to take the cosigner off, but they may have gained way more, like you're saying, just by the appreciation on the home and being able to get mortgage payments to reduce the mortgage balance. Like there's all that.
Mm-hmm.
Yeah. So I know we have more questions here, but I think as we are getting through our program, maybe we should do one or two more. And there was the two that you had suggested before we started here, and that was the one: should I pay down debt or should I save more of a down payment?
Mm-hmm.
And that is a really, really good question, because Sam, I know you've gotten that a number of times. I've gotten it a number of times. And I don't know about you, but it seems to be unique to the person, doesn't it?
It is. It's usually we get asked, or at least I have been asked, midway through the pre-approval. Usually when, to start the conversation with our office, usually we do a pre-qualification call, and in that time, it's only a 20-minute appointment or so. We look at some of your income and your debts, and just give you an idea of what you'd qualify for. And usually it's around that time when they see what they qualify for that they're wondering, where should I be putting my finances? I've taken the first step chatting with a mortgage professional. Now, should I be saving more for a down payment, or should I be paying off the debts that I have? And exactly what you were saying, Joe, it is very case sensitive to, what your situation is. So I don't know if we'll give an exact answer that this is always going to be the solution. But it definitely depends on your situation. We've seen that some clients have come to us with debt that it's just too high, that it's not necessarily achievable for them to pay off the full debt. So in situations like that, if you have very high credit amounts, we actually could see that, getting either gifted income from family or just saving your money as to go into down payment would help you out. Whereas, as we were discussing before this show this morning, Joe, that if you have a credit card debt of 1,000 and a car loan that only has a couple thousand left on it, if it's something achievable for you to pay off, reducing that debt is definitely going to help you out.
That's excellent. Yeah, I think you covered it off there pretty well, Sam. And yeah, it ends up being very unique. So definitely give us a call to chat about your situation, because if we can just have 5 to 10 minutes to talk about those different scenarios with you, it could help you arrange your funds in a way that helps maximize your mortgage amount. And sometimes, putting an extra 10,000 down will only get you an extra $10,000 in affordability, whereas putting an extra 10 grand on your debts could get you an extra 100 grand on your affordability, depending on where you're at. So always different. But yeah, very, very good question, and question we get a lot. And the last question I think we should cover for today's the one that we always get, and probably the top question of every year, and that's, how much do I qualify for? And Sam and Terry Lynn and myself are answering these questions on a daily basis. And like Sam mentioned, we do a pre-qualification call before we even get started with anything. So if you give us a call or an email, we can help determine not exactly, but roughly where you're at on a pre-qualification call. And then as we move to a pre-approval, we can then take a look more of your documents and confirm all that and verify it. So it's a hard, fast, firm figure for you. And from there, you can take that, start shopping for a home. And but if you're just looking to get pre-qualified, phone call, 20 minutes. I know that Sam can help you with that, and myself can help you with that. Give us a call or an email and schedule your 20-minute appointment. So let's take a look at, do we have any questions? I think it's been pretty quiet today. I don't show anything in the chat. So what we can do is we can start to close off our program here, Sam. And as people comment throughout the week and throughout the week, we'll add them to the draw for the Skip the Dishes card. And hopefully next week when we come on, we can give them to do the draw online, and we can have some fun with it.
Yeah, sounds good. It's a whole week to get in. So even if you have questions that we missed, if you write it in the chat next week when we're doing the show, we can even look back if you have questions. You're watching this video later tonight or later in the week. Feel free to write those questions, and we can always circle back next week with any questions that you have.
Excellent. Thanks, Sam, for that. And don't forget, if you are looking for a pre-approval or getting a mortgage approval on a refinance, give us a call. And also you can also Facebook us through Facebook Messenger, or chat through YouTube, whichever platform you're on. Email, and we can set up a video call with you through any platform, WhatsApp, or I think WhatsApp is actually done now. I'm not sure, but like Facebook Messenger video or FaceTime or Zoom or anything. So yeah, that's a great that's been a great time, Sam. Thanks for joining me today on this show, and appreciate your time, and hope everyone has had a good time. Again, my name is Joe Bladek and Sam Thompson. We're mortgage professionals here in Ontario, particularly focusing in on the Barrie, Orillia, and Midland area. And I hope you guys have a great day. We'll just